This is our Forex blog for January 13th, 2014, and these are our currency indexes, which let you see as a chart what each individual currency is doing. Here's the dollar. You can see it's trending down. Here's the hourly moving average. Here's the previous day's low. So in other words, it's lower today than it was the previous day, the lowest low, and that's a sign of weakness. Same thing here with the euro. The yen, on the other hand, is trending up. It's above the previous day's high. It's above the hourly moving average most of the day. And also the daily, weekly, and monthly trend is up. So there's a lot of ways to use this to trade, but in a nutshell, you want to buy the strong ones versus the weak. The euro's trend is down, the pound's down, and also the dollar's down. So you want to sell all those currencies versus the yen. It's really that simple. But before I do that, let me just show our Forex signals for today. Most people trade the euro dollar. You can see it gave a sell signal here. That was a small win. Give a buy signal here. You would have got out of this bar and this close right here when it gave a sell signal, so you would have had a small win on there. Big win here. Loss. Win, 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 win. And this one's still in. So for those of you who don't want to learn how to trade, you can just wait for these signals, and you can also put an audio alert on here if you want to get notice of when there's a buy, and it will tell you which currency. So if you'll hear euro dollar buy, and you can run to your machine and put the trade on and put the stop in. So let's go over the Forex blog for those who want to learn to become professional traders or trade for a living. The euro was weak, the yen was strong, so you want to look for sells in this. And it's very easy to trade on days where one currency's obviously weak and the other one's strong. Basically, you want to look for two different types of patterns. One is a pullback trade. The trend's down, you wait for a move up, and when it breaks, you can either eyeball the trend line or you can draw it. When it breaks that up moves low, you get short with your stop right above the high. And so you can see you made a small win on this trade. Another entry here, you may get out when it breaks the trend line off the bar's high. You might have missed this trade right here, and then there was a nice pullback. It never went above the high of the day, and it was the biggest move of the day. But you can see many hours before 8 o'clock here that euro was weak and the yen was strong. If you notice on here, the yen was strong for many hours. It made a pullback. Notice the perfect oscillators at the minus 80 level. These are usually perfect places to buy when the market is in an uptrend. If you see a currency that's super weak, when it hits the plus 80 level, you want to look for sells. So look at this right here at 7:15. 7:15, you had notification that the euro was likely to go down. That's about right here. Obviously, it's a little bit premature, but it did only go up another 10 pips. And if you got short right here and lost 8 pips, got short again right here, obviously you got your 10 pips back, and you made an extra 10, 20, 30, 40, 50, 60, 70 or so pips. You're not going to ever have 100% winning trades, but when you see the currency's trend is down and another one's clearly up, you want to sell the weak one versus the strong. Now the pound was also weak, the yen was strong, and this is a nice chart because it illustrates the second entry method that we use. One is a pullback trade, and the other one is kind of the very minimum, a 2-hour rectangle pattern. The longer it goes sideways in a tight rectangle, the better. And basically you would be short when your stop would be right above the high. You would get in right here, and this is, your risk. This is your risk, and you're never going to catch every pip, but even if you got out somewhere right here on the pullback, you made 2.5 to 3 times more than what your risk is. And then for the next entry, you're basically looking to, again, sell it when it breaks the trend line, and your stop would be above the high. And most of the time when the currency is super weak, it will retest the lows. That's a good profit target. So it kind of comes down, and then you kind of draw your trend line over the bar's high, and you can see a 1, 2, 3 reversal pattern right here. But if you don't even know what that means, just kind of, especially if it's 25, 50 pips or more away from where you get in, the previous swing low is a pretty nice place. You made about 75 pips there. So you had a huge win and another huge win, and the second one was substantially bigger win than your risk, probably 8 times bigger profit than what your risk was. Let's look at some of the other currencies, and we'll try to find some other ones that were strong. The New Zealand strong, the Australian strong, Swiss is weak, and you can see the longer term trend of the CAD is weak, and it gets strong right here. It's very likely to reverse above our upper bands. We're going to focus on the Australian and the New Zealand. The pound was weak, the Australian is strong, so we want to sell the pound Australian. And again, look at it just go down, down, down all day long. Let's look at the pound New Zealand. Down, down, down all day long. Here's a perfect example of the rectangle pattern. You get short right here, and typically currencies are this week, you're going to get at least 2 waves down. So if you get short right here, you kind of doesn't have much of a pullback. This is the second wave down. Great place to get out of your trade for the maximum profit. Huge win, small loss. This is what your risk is, and you're never going to catch every pip, but let's say you got out somewhere around here. You can see you made 1, 2, 3 times or more bigger profit than what your risk was. And that's it. That's the key to trading. And again, for traders who really don't want to learn how to trade, you can just use our Forex Signals. It shows up under Add Script, FX Trade Signals, and just take these trades. These are based on swing analysis, Fibonacci profit targets, Fibonacci retracements, 3-line break, support resistance. There's 28 different levels we use. We use the 4-hour in the daily, weekly point of control, which is value profile technology. You don't need to learn that. It's very sophisticated, very complex. Probably one trader out of every 500 or 1,000 understands that properly and uses it, but you don't need to, because our Forex Signals use those in their analysis. And just take these trades, and if you're long and it gives a sell signal, you exit and you flip. So this one went long right here, so you would have got out on the bars close right here. Even this, trade here, you made a little bit, you got out, right here at 53, you're short at 56. So even with a wide spread, you probably broke even on that or made a pip or two, and then you had a nice win there as well.